Currently, when there was a gradual withdrawal of pandemic from the world, another significant event has rocked the world economics. It is the Russia-Ukraine war. These are the major commodity producing countries, and it has disrupted the worldwide supply chain of major commodities, especially oil and natural gas. This has resulted in soaring oil and gas prices and in turn impacting all major manufacturing industries as well as power generation. In turn, it has again created inflationary pressures which affects the demand, thereby affecting the growth in the economy. We as professionals should not be concerned only with the financial statements accuracy and tax planning, but should be looking at a role as a business advisor. With our academic background and better understanding of the economic realities, we can really add substantial value to the business community. It is to provide insights into how the crisis affects various businesses and how by analyzing the trends in commodities, fiat currencies, or debt markets and capital markets, we can provide valuable inputs to the corporates that today's lecture meeting is organized. Today, we have with us Mr. Kushal Thaker, an internationally renowned commodity trading consultant with expertise of commodity research and hedging strategies. He has delivered lectures earlier too at BCS, and we have all benefited from his lectures. He delivers lectures at international commodity associations and management institutions worldwide. He has recently written a book, Be Rich with Specunomics, which is available on Amazon. He calls himself a specunomist, and hence he shall be giving insights on how analyzing economic indicators with some speculative instincts can provide manufacturers, investors, commodity traders, and currency dealers an edge to be ahead of others on the value chain curve. Before I request Mihir to introduce the speaker, I would like to briefly provide glimpses of the activities that BCS undertakes for the benefit of those who are attending today's session and who may not be part of BCS family. It is the oldest voluntary body of chartered accountants and will be shortly entering its 74th year. Foremost motto of BCS is to disseminate knowledge to members, build their skill sets, and to provide a networking platform to like-minded professionals. It also acts as a catalyst by representing to the government bodies for bringing out better and effective government policies. I request non-member CA professionals to onboard BCS platform as members to derive benefits in excelling as professionals. This will be achieved through gaining of in-depth knowledge from attending workshops, seminars, and residential courses which are organized throughout the year. You will also be privy to the much appreciated BCA Journal, a gateway to insights on topics of professional interest. You will also be inclined to give back to the society through your sharing of knowledge. I now request Mihir to introduce the speaker. Thanks, and have interesting interactive 90 minutes.
Thank you, Abhay. Kushal Thaker, as Abhay said, is a man with multifaceted personality. He's not only an author of a book called Be Rich with Specunomics, but also has addressed substantial number of forums with his knowledge developed on various aspects of commodity, stock, and other trading platforms. His activities are into three parts. One is as a trader, speculator, and economic expert. The other one is as a counselor and coach. And the third one is as a consultant and expert. As a trader, speculator, and economics expert, he trades in physical and futures and options market across metals, grains, plantation products, spices, and other emerging asset classes, spanning across 18 to 20 exchanges globally, covering 60 agricultural and mining countries. He pursues commodity trading through extensive knowledge, experience, networking, and crop service, thus enabling the understanding the global factors, weather patterns, and economic cycles that influence commodity prices. Value-driven approach in commodities, resulting in the ability to understand, discover, align, and control the value chain and business processes in distinct segments, give himself a distinct edge. He analyzes the timing and times the global situations, the rise and fall of various asset classes, and thus interlink their impacts on each other. As a trader, speculator, and economics expert, as a counselor and coach, he is a visiting faculty at top-ranked management institutions across the globe. He addresses the plethora of seminars enabling money spinning and wealth creating opportunities in various asset classes across the globe without boundaries. His regular interactions through interviews and podcasts spell out trading ideas and strategies. As a consultant and expert, he handles comprehensive commodity research, trading, and hedging strategies since 1996 for investors, family offices, and financial institutions, and offers accomplishable and concentrated guidance in stocks, currencies, e-currencies, and other innovative investment concepts. He is also a partner at Equispec Ventures India and also a director at Equispec Incorporation USA and the Bombay Commodity Association. We are going to have a very interesting session, and I leave the floor open to Kushal Thaker. Before I hand over, let me remind all the viewers who are watching this that this is an open forum, so please post your questions on the question and answer session, or currently you can just put up and then it could be dealt with by the speaker. Thank you. Over to you, Kushal.
Thank you, Mihir Bhai. I think after giving such a long appreciation list of me, I thought it would have been better you would have waited till the end of the session, because in case if I don't live up to the expectation, there'll be nothing but criticism coming from all around. So anyway, thank you very much. And so good evening, friends. Thank you for all those people who have always frequented my sessions at the BCAS and who have got a lot of confidence in me. Also, welcome to the new ones who have heard some hype about me, and I hope I can live up to your expectations too. Before beginning up the main analytical session, I wanted to talk 2-3 minutes about my book, which has been recently launched. The history goes behind is that from 2005-06, from the time I have been speaking on international forums, continuously there have been requests and in fact pressure that I come out with some kind of material, newsletter, social media stuff and everything, which I have avoided all the years. But lately there was too much of, I would say, in every forum I would go, people would be very seriously talking about that, please, it's been 25 years since you have been in the speculative line. We would like to understand your mindset as well as a successful speculator's mindset. And that made me write this book. In fact, the book is very much internationalized, except for the author who's Indianized. And the reviews that I have received from the initial sales, I believe that it has become more of a reference guide for new investors as well as for seasoned investors. And in fact, a lot of engineers and doctors from non-finance and non-market background have appreciated that their understanding of various asset classes have improved. In India, the book is not available in the bookshops, but yes, it is available in Amazon and you can order it. I'm not soliciting my own book, but if you want to actually understand how every asset class can be analyzed independently, this would be a good book for you to begin with and a good reference guide for the future too. Now, let's begin with the serious part of it. I think the most important question which everybody's mind currently would be is that what is going to happen to the stock markets? So let me first touch on that topic itself. 8 months ago, I was at this forum and I had said that even if the markets have to fall or be in a corrective mode, no market will fall more than 20%, because beyond which I cannot see anything go wrong. Unfortunately, the markets have corrected with so much of bloodshed, and in such a short time, the carnage has happened that people have panicked more. But if you look at the indices, they have still not yet corrected by 20%. We are still in the 15% range, and 20% range for Nifty would be something like 13,700. And I personally do not see that happening unless major geopolitical situations unravel themselves in the times to come, which personally I do not see, and I do not see anybody taking it to that extent. The one thing where I'm sticking my neck out today is I think the market has already bottomed as on Monday. I doubt whether the market can go below the Monday bottoms, and even if it goes, it will be very short-lived. And the base on which I am claiming this is also based on certain macroeconomic factors. The price earning multiple of Nifty 50 today is running at 20. It was running above 25 a couple of months ago. It's I think at 16,200 levels where Nifty is today. The P is 20.12 if I'm not mistaken, and it is calculated on the basis of the earnings of 809 annualized, trailing by 12 months. If we read the reports of IMF and World Bank last week, they consider India to grow at 6.6%, even in the current situation, putting it at amongst the top 5 growing economies of the world. Now, if in the first and the second quarter, if we even get the indication that India is leaning towards a growth of 6% also annually, Nifty has to increase by 12%. That means that gives me an earnings of 800 into 12, 96, close to 900 EPS. Even keeping a price earning multiple of 20, Nifty has to touch 18,000 before March 2023. And if the going is that good in the first and the second quarter earnings, we may see that figure before December quarter itself. This is what I think based on simple macroeconomic calculations. Now, globally also, if I look at all the indices, all of them have corrected to the tune of 15 to 17% currently, except for NASDAQ, which is completely tech-based, and there were I think the weightage of the FANGs was too high for it to give a correction of 20%, which was likely. But if you even look at some of the bigger stocks in the FANGs, like Amazon and all, their price earning multiple has come down from over 100 to 50 to 60. So everything has come down. All the earnings have got adjusted. Personally, I do not see any problems with the growth around the world, because if there was no growth, none of the central banks in the world would have increased the interest rates in such a fast pace. Their problem is inflation, and inflation cannot be just controlled by increasing the interest rates. The main issue is coming from the supply bottlenecks, which nobody is willing to address to. And a lot of people have been talking. In fact, I'm sure you all must be also reading and hearing a lot of stuff into the media about that we are on the brink of a recession. But my question always has been to various economists and bankers wherever I have addressed in recent weeks, that the economics that we all have learned, where have we seen inflation and recession simultaneously? It just does not happen. Both are separate phases, and till one phase is not over, the other phase cannot come. And if inflation, if we look at the opposite of inflation, it is deflation. Now, straight away from inflation, we cannot move into a deflation also, because in between there is a phase which nobody talks about, is shrinkflation. Now, this is a term which was developed by a few economists out here, where I was also a part of that forum. And till inflation does not come down without affecting growth, and after that, when it affects growth, then we start looking at the stagflation part of it. But there can never be a stagflation in long future, because the world, 70% of the economies of the world are growing. So if they are growing, the demand is increasing, people's wages are going up, companies have been able to manage their earnings even when they were in a pandemic stage, coming out of the pandemic stage. How can we move into a recession? Unless and until the governments of various countries want to force a mild recession on the world. But if a mild recession is forced, it will spiral in such a manner that it cannot be mild anymore. There will be nothing but chaos and civil disobedience across the world, which I do not think anybody wants that. So even if I say that, let's say the Fed or Reserve Bank of India or the other central banks of G20 countries who have coordinated the rise in the interest rate to curb inflation, are doing nothing but they are trying to destroy the wealth in such a manner that our demand goes down, and so the supply and demand can be met. Rather, why not focus on coming out with such policies where the supply is increased, which I do not think they have any ideas to. Because where the inflation is there, it is in energies, it is in agricultural commodities, which is privy to whatever sorry, I lost the flow over there. That it all depends on the weather, the pricing of those commodities, where agriculture is concerned, and where energies and metals are concerned. It mainly depends upon how the companies or the miners are planning to increase their production and how they are going to release it through the ports, which are already choked with the inventories lying over there, and there is no proper staff to load, unload, and carry on other activities. Rather than solving that just by using the tools of interest rates does not help us out, number one. Number two, by increasing the interest rates, if rupee also has to weaken, the problem of inflation is never solved, because where India is concerned, our three most important commodities are imported, considering the fossil fuels, the vegetable oils, and precious metals. Everything is imported. And our bill, the exchequer bill of that itself is 60% of our forex reserves. So if rupee keeps on weakening, it just does not solve our problem. This is one thing. To all the people who are attending, I will be swerving from one asset class to another because I'm not following any organized script with me. So please bear with me, but I will try and put in as much as possible for your information. I think the second most important thing which people have in the mind is what is going to happen to crude, because if crude keeps on going up, it is going to destabilize our economy or any other economy. Now here also, this problem also of the price of crude rising has come to the issue connected with policies of certain Western countries again. For example, where USA, UK, Germany, and some of the other European countries are concerned, they were so bent on the zero emission targets by 2050 that they started giving up on fossil fuel mining, construction and exploration of new oil wells. Some of the Western European countries gave up on nuclear energy also. They gave up on coal for power production and everything. And this has resulted in not enough crude being available for the world. Secondly, they thought that the renewables will immediately be able to balance the deficit, which is not possible, because where production of renewable energy is concerned, there are many structural and infrastructure issues which have to be addressed. Now, till those issues are not addressed, I do not think that the action of banning on fossil fuel should have come so abruptly. I think the policymakers should have planned it out and strategized it of how they want to phase it out as the new technology on renewables come into play. Now here what is happening is that the demand of power has increased across the world. Fossil fuels are not available. OPEC doesn't want to increase their production because this is the best time they are having to get their deficit balance sheets of their economy into surplus. For example, let me do a number crunching out here. For example, Saudi Arabia, which is obviously the largest producer and exporter of crude oil, their balance sheets do not match till $67 a barrel. So for them, anything $67 plus is what they require. A country like Russia requires crude oil above $45 a barrel for them to balance their balance sheets. Now, currently what all these countries are getting are nearly 50% higher than their own cost of production. And they would love that Russia-Ukraine war continues to some more extent so that their balance sheets and those countries come into surplus, because most of the OPEC countries had realized one more issue, is that there is food inflation which is around the corner, and if crude oil prices keep remaining at lower levels, we will not be able to meet our import bills of food. And that was one more reason why they love having any skirmish going on anywhere in the world for crude oil prices to remain at the higher end of it. But naturally and left but to itself, crude prices at the current demand supply statistics, if I look at it, the demand for crude is not more than 97 million barrels a day. And in fact, the demand month-on-month basis is incrementally falling. The reason is again because of environmental awareness around the world, less usage of plastics, less wastage of some of the cracking products of crude oil. A lot of countries and a lot of industries have shifted from crude to natural gas, which is a little cleaner source of the fossil fuel, though still it is part of the fossil fuel family. All this has resulted in demand coming down or trickling down. But the supply has been controlled to such an extent that if demand falls, even the supply is being brought down with a hammer. And and this is what is the wrong part of the policies in the world. Looking at, again, I'm swerving into one more field, which will also prove that there is growth in a particular sector, is automobile sector. In the automobile sector, I only have figures up to, I think, March end and mid of April from Asia and Europe. The automobile sales have fallen in whatever one and a half quarter by about 15%, but within which the sales of electric vehicles have soared by 60%. The demand for electric vehicles is high. The demand for other electronic technologies, which is replacing the traditional technologies, is high. The demand for power is increasing. We are seeing power outages across the world, and if the world does not double its power capacity within the coming 12 months, we are going to have various grid failures across the world. Now, if this is the growth that we are seeing from other sectors, the growth of the power sector is also very critical for the world, and this is across the board. So whether it is thermal power, hydropower, or the renewable energies, nuclear energies, everything, we are going to see huge amount of demand of the commodities which go not only from the construction of the electric vehicle, but also in developing the infrastructure of various power plants. So from across the board, the base metals, the rare earth metals, your ferrous metals, the growth is going to be there. A question may be posed to me that lately, since last 2 months or something, the prices of steel, copper, and some of the critical metals have come down. Yes, they have come down by 10%. And even if they fall by another 5 or 6% or maybe 10%, please, they are not in a bear market. The only reason why they are falling is because since last 18 months, the electric vehicle and the component manufacturers, as well as the power industry, had been buying all these metals because they were available at reasonable prices, and they have stocked themselves up. So currently they are utilizing their inventories, due to which the fresh supply is a little larger than the demand. But once their constructions and the sales of their products and everything starts happening, or the projects get commissioned, again the demand will become larger than the sale, because we are not going to see replacement or new mines coming till 2026 in the major metal producing countries. The other sector which I even wanted to move into was the food grain sector. Let me again assure you that Russia-Ukraine was only the trigger point for the prices of the food grains to skyrocket, but the problems had already started about 9 or 10 months before that. We had our what you call the food grain basket of the world, Brazil, and some of the other South American and Latin American countries were already facing kind of a El Nino, La Nina phases, due to which a lot of crops were affected. China itself did not grow much, and their imports kept on multiplying, even during pandemic, post-pandemic, and even currently when the lockdowns are being lifted up. The crops are not doing too well in China, and more of a globalization. I think the countries which are producing farm products have started being more protective. And I think it is not a wrong policy, because if some of the food grains get exported, and if that country does not have a proper weather pattern, that economy can suffer also. But coming specifically to India, we've been lucky that we had a very nice Rabi season and a Kharif season last year. This year, we are predicting, at least to start with, a good southwestern monsoon. Possibly the sowings are going to be very good, but we cannot see down 6 months from here that in case if the last round of rains or something does not turn up and certain crops are affected, the food inflation will continue. This also brings me to the point that the farmers in India in the last 2 seasons have done very well for themselves, where the production was also good. They had a good price, that the demand for many of the capital goods, the white goods, and even the consumer items is going to be very good coming in from rural India itself, is still going to keep the growth of India moving. And I think that is what the World Bank and the IMF have been forecasting, that we will be able to maintain 6% just on the basis of our rural growth, if rightly taken. Now, if that growth continues and if the demand still remains high, I do not think inflation can be controlled so easily. So even if Reserve Bank of India, or maybe similar situation with other countries, if further interest rates are increased, we may have kind of volatility where equity markets are concerned, but the growth is not going to be derailed so easily, because the growth is coming right from the roots of India, and it is not just at the surface of it. I also appreciate that some of the farm policies of India, which the current government has come out, they have been proper if rightly implemented, because if India has to feed an ever-growing population, as well as if we have to export also some of the stuff to take care of our neighboring countries or some other countries from whom we are importing certain other critical commodities, what may happen is the prices may again shoot up, and the government or Reserve Bank may be forced to increase the interest rates. But I still feel that has to be taken all with a pinch of salt, because it may still keep India growing for some more quarters, which I don't see in any foreseeable future any major problem happening, unless the problem comes externally, or unless the problem comes like if Russia stops complete supply of natural gas to Western Europe, and Western Europe have a civil disobedience movement and they are up in arms, and we have a major war-like situation spreading across the Europe. But I do not see they will allow such a situation to unravel itself. At this point, I also want to say that the correct technology for increasing our own agricultural production in small pockets, we have started doing hydrophonic farming. And if it is caught at the right pace, at the right fervor across the country, I am sure India can even come out of their own food problems if it ever arises. I think at this particular point, I would like to take any few questions before I jump into some other asset classes, or if you want to take me into some of the asset classes where you want me to throw some light on. I'm sorry, I cannot read the questions. So in case if any questions have come, please feed me in.
Currently, we haven't yet received any questions. I think you are making much more clarity on the thoughts which they would be having to question also. So you can continue. But what I feel is that you also touch upon the commodities which are very critical to the semiconductor industry, and which is going to impact substantially on the movement going forward towards the electronic mode of doing business worldwide.
All right. So where I think people have been talking about chip shortages across the world. Yes, chips, there are shortages across the world because there have been bottlenecks of the rare earth metals and other metals that have been used to manufacture these chips. But most of the countries seeing such a situation, foreseeing such a situation many months ago, some of the companies have diverted in captive production also. So 10 to 15% has been replaced by their own captive production. Some of the companies like Tesla and all on international front have set up their own chip manufacturing plants that even includes Apple and Google. They have done it. In fact, some of the Indian companies also have tried to take over certain other chip manufacturing plants in East Asia, and they have been addressing the problems directly. Now, there was one question that was raised by Mr. Mihir Sheth when we started off the session, was that if China attacks Taiwan, and if the largest semiconductor plant, Taiwan Semiconductor Manufacturing Corporation, comes under the fold of China, they will be able to control. But let me clarify that TSM has expanded its parallel production to East Asia and Latin America. So parallel production has already started. So let's say if China attacks Taiwan in this month itself, yes, we have a major crisis. But if they delay it and they prolong it, the crisis would be addressed to by not only the TSM, but also by the other chip manufacturers who have already started setting up plants closer to the facilities where these rare earth metals are available. So I think this problem is going to disappear within, I think, 6 or 7 months, keeping all conditions constant. So this is the best. And yes, it is a good investment opportunity in the semiconductor industry. I would really say put some money into it. The returns are going to be fantastic on that front. This also brings me an opportunity to bring one more factor. The book that I have written, as I have said in various forums, as my mind goes, that once you have analyzed the commodity through major economic factors, the same analysis can be extended to the balance sheets of the companies which are either having that particular commodity as a raw material or the finished product. The smoothness, many people have said it is not very smooth to analyze the commodity and then move into the company's balance sheet. I am not soliciting my book, but yes, in this book, I have explained it, how the time lag and how the changes can happen, and how the proportion in which the commodity has increased or fallen affects the company's stock after the balance sheet have been substituted by the figures of the commodity price movements. That also will give you a very good picture of analysis. And there's a possibility you may not even require me to come on the forum once you've read the book, because everything is put in the simplest of manner. I think a few questions have popped up, but I could not read them. If somebody can tell me.
You can take up some questions.
Yeah, I will take up the question.
Yeah.
Okay. So one of the question is, what is the right mix of investment for an average investor, debt or equity going forward?
I still believe we still have a lot of growth stocks across the world, but let's talk about India. From the metal sector to the power sector, all of these are going to be growth stocks. We are going to have a lot of value stocks in terms of FMCG, if I'm right, where rural India is concerned. So you have a proper mix of the growth and the value stocks in your portfolio. And I think that itself should give you phenomenal returns, much higher than what you may have even fathomed.
The mix here, the participant is asking is about the debt or equity.
You mean debt or equity?
Correct. I mean, he wants to know the mix for a debt and equity going forward.
Personally, I would completely avoid the debt instruments. I do not think they can give you that kind of return over a longer period of time. Equity currently is the way to go. Even if you have these kind of carnages, in fact, they are giving you good values, and a lot of stocks are undervalued at current levels. Good accumulation at these levels is going to result in multi-bagger returns. And remaining in equities over a longer period of time is still will give you much, much better returns than any other asset class, except one, but we will talk about it later.
Okay. Another question is on water entering commodities. I think there's some typo error. Water entering commodities, you are reading, and its impact for India.
You are talking about water as a commodity?
I mean, I'm not clear. I mean, it seems to be a typo.
I feel he considers water as a commodity.
See, anything and everything is a commodity that is traded, whether in the unorganized sector or organized sector. And water is a very, very critical commodity. In fact, we are seeing, again, going to Brazil, which is the food basket of the world. Brazil last year was divided into two parts. One part was Anavrashti, which is El Nino. The other was Ativrashti, which is La Nina. And we had a phase where there was a failure of the plantation products in the first 6 months, and some of the grains came up well. And now we have a reverse situation where the plantation products are growing well and the grains are in trouble. Now, this is a situation which even a country like USA is facing a problem. Southern part of United States of America is in a drought situation, due to which cotton crop is affected. USA being a major producer of cotton, we are seeing currently the cotton prices have tripled, even in India. In India, cotton was available exactly 11 months ago at around 17,000 a bale. Today, that price is 51,000 rupees a bale. In 11 months, this is what has happened to the prices of cotton. Now, if the same thing, if I'm extending to the stock market, which I'm supposed to be good at, is that some of the cotton manufacturers or some of the cloth manufacturers have made money out of whoever was sitting on the stocks of cotton, because they were able to sell the yarn at a much higher price. But the fashion industry has been affected because the prices have shot up to such an extent that they cannot pass on everything on to the consumer. So their earnings have shrunk. So this is where a good linkage or a good swerve between a commodity and an equity can happen.
Okay. The next question is on your take on the lithium supply, which is critical input for the EV battery manufacturing.
See, I did mention electric vehicles is the future. In fact, the European and the Asian sales of electric vehicles in the first quarter have soared by 60% over the last quarter. Lithium is critical. There is no doubt about it. Unfortunately, in India, we do not have any lithium miners, for which we require to go investment internationally. And yes, we do have the permission through the LRS to invest in lithium miners across the world, at least to the extent of $250,000 a year. And I really feel every Indian investor should take advantage of it. Because in India, you may not be able to take advantage of a lithium miner, but you may only be able to take advantage of the companies which are producing all the auto ancillaries and the components for an electric vehicle. Even to that extent, the returns are going to be good because there is a major shift in the consumption pattern.
What is your reading of the future political stability, and what are India's strengths to sustain those turbulences?
As of now, whatever I say that we have come up with the right policies, the only issue is implementation across the country. The farm policies are excellent because some of our visionaries, whoever they may be, they have been able to foresee that if our own farm produce does not grow in a geometric progression, India will suffer and we may not be able to control the inflation. So if everything is implemented in the right manner, with the right technology, some of the technology may have to be imported, but that has to work in the future. That itself can bring in stability. See, even if there is political stability, but if the ground reality is not stable, then there are going to be other problems which are going to crop up.
Then again, a question is, I think, on the lithium battery again, that its prices are rising and still the electric cars in big demand. What is your view on lithium metal and what level it can start impacting consumption? Since still
Currently,
aluminum substitute has not been available except the sodium battery, what is your view on hydrogen fuel cell technology?
all right. First, we talk about the lithium side of it, that yes, an electric vehicle cannot work without lithium part of it. I also want to talk about that the prices of lithium, lithium carbonate that is mainly used to manufacture or to have a lithium battery. The prices currently are running at a range of $45,000 to $60,000. Now, the lithium miners are going to quadruple their own production in the coming 4 years. If that happens at the pace at which it has been predicted, lithium carbonate prices will come down, which will bring down the prices of the electric vehicles to some extent. Vis-a-vis, we also need to see the other metal prices which goes to manufacture an electric vehicle, how their supply issues have been addressed to. Now, the hydrogen fuel cell cars, yes, they are the best competition to electric vehicles, but we also have to remember that it is a hydrogen fuel that is going to give energy to the cell, which is again the battery in that car, which again has lithium in it. So let's not compare lithium with hydrogen fuel, because the battery is going to be lithium only. That is the only metal currently in technology which is a very good conductor of power, which is generated by whatever technology you are coming up with, except for the fossil fuels.
Correct. Okay. The next question is, what is your view on the wheat ban by India?
Sorry, I didn't hear it properly.
A wheat ban. Recently, the government of India has banned export of wheat.
Okay, all right. See, India has had, our wheat production has always been above 100 million tons year-on-year basis. And India has always got good inventory. which actually used to rot in the Food Corporation of India godowns and other governmental godowns. To some extent, it is better that wheat is exported to countries who are in need, as well as there used to be a food for oil program, which India used to participate, where we used to give out wheat. See, wheat is a staple diet for most of the world, because without wheat, there is no bread on anybody's table. And if that is given to certain countries, and if India is getting crude oil in return, fine. If it is given to certain countries where it is needed for their own population, it is a very good, generous step on part of us. But if the production of wheat is going to be affected in India, which some people have been talking about it because of the current heat wave, what is happening is that the areas where wheat is produced is facing so much of heat that the soil itself is getting too dry, that the water table itself is going much below to bring about a normal wheat production if good rains do not come in those areas. So for the protection of our own food security also, we require to see to it that we do not unnecessarily export too much wheat till our own monsoons are not in place properly.
I have one question. It's regarding the food industry only. Now that India is promoting more of non-urea based fertilizers to be used so that the soil erosion is contained. With the rise in the phosphoric acid prices, do you think that India will again have a situation where the DAP imports will be impacting the balance of payments in India or the prices in India, and so along with that the subsidy which they have to give?
See, there is no doubt that the soil in India, in most of the arable regions, requires natural micronutrients, because many farmers have not been following alternate cropping pattern. Now, the question which you have raised is, yes, it is a very, very valid situation which can happen, provided the Indian fertilizer, micronutrients manufacturers and others pull up their socks and get the right balance of the production depending on which area where they have to send it to. The other problem what India has been facing is the wrong fertilizers are being utilized either at the wrong soil or at the wrong crops. Even if that is addressed, 50% of the problem disappears, of all the phosphoric part of it and the ammonium phosphate part of it also.
You are mute. Kinjal, you are mute.
Sorry. The question is, what is your reading of the climate change on the economy?
As of now, whatever satellite imageries
Kushal, can you hear me?
Sorry. Can I continue?
Yeah, please.
Yeah. As of now, whatever satellite imageries me and my team have been analyzing, the southwest monsoon of India has already entered the state of Kerala, which is 3 days earlier than normal. It has entered in the right pattern. Hence, we can see Karnataka and Maharashtra receiving rainfalls after the mid of June, which becomes the pre-monsoon showers. Usually early pre-monsoon showers usually follow with the first phase on time. And if that happens, I think at least we should not have a problem where Kharif crops are concerned. Rabi crops is too early to talk about. The only issue that India may be facing is what are the farmers' sentiment and which crop they want to go for. Certain agricultural commodities prices are so high that the farmers may overproduce them, and some of the other crops may get lagged behind, due to which we may have certain commodity prices to collapse and certain commodity prices to rise as Diwali comes. So as of today, it will be very difficult what the farmers are going to decide, because the farmers will start tilling their soil from June, and that is the time we will have to understand what is their sentiment, what is their monetary strength, and what are the seeds they are buying from other seed companies to sow. So a lot of speculation will be happening post-June on this part of it.
Then another question is, as Fed is going to start doing the reduction of their balance sheet of a very big magnitude, which market has never seen in the past, what way will it affect the Indian share market, as FIIs are already selling continuously in the Indian markets?
See, I do not want to touch on the controversy of which are the FIIs who are creating problems. We all know the genuinity of the FIIs. So I do not want to go, because this is our Chartered Accountants Forum and we exactly know where the FIIs come from. But even if Fed is reducing the quantitative easing part of it, please remember that it is not going to disappear. The additional leverages which are there in the economy is getting reduced. Where India is also concerned, the additional leverages only will be getting reduced. The real growth is not going to be affected. As a matter of fact, if the central banks of the world, or particularly of the G20 nations, have got the courage to increase the interest rates and to reduce the quantitative easing, that itself shows that the ground reality is that the real growth is there across the world, and they cannot allow that growth to go to such an extent that inflation becomes hyperinflation. It is a very, very crystal clear economic indicator for us to be bullish on most of the markets.
Correct.
The questions are not there, but you can continue with one more, I think, item you were talking about.
Another interesting question has come up. What is your reading of the crypto as an asset class?
Sorry, I didn't hear the question.
The question is, what is your reading of the crypto as an asset class?
Okay, so that was one of the sectors which I had kept when the person had asked me that apart from the equity market, which, yes, crypto as an asset class is the future is here. It has to be embraced totally. I understand that the volatility is very high in the cryptos, but the volatility is high in any other asset class also. In fact, we have seen crude oil collapse from $70 to negative $30 also. At that time, nobody is arguing why crude oil had to go down so much. But please remember one thing. I would like to specify here. Do not take cryptos as a myth. Cryptos by themselves are specific blockchain technologies which are here to stay. We are using those blockchain technologies in our everyday life through apps on the phone and other electronic gadgets, or even the payment systems and everything. And there are various fundamentals backing all these cryptos. Just the way we have 7,000 plus stocks in the equity markets, we have 8,000 plus cryptos which are listed across the world, not on a single platform, but various platforms. And each crypto has a particular blockchain with a specific purpose. Just as we have various industries, cryptos are also divided into various industries and various sectors which are fulfilling a particular task. Just like the equity markets, we have our blue chip stocks, A group stocks, and then the mid caps. Even in the cryptos, we have this kind of distinctions. And if it is analyzed properly, I am sure you will find the use of a particular blockchain and a particular crypto to such an extent that you may want your portfolio, rather than diversifying towards precious metals, you may give much more weightage towards cryptos. I understand that a lot of information on cryptos is not available, but there are various websites, there are various search engines. Please utilize them, but do not do not listen to too much of, I would say, unsolicited tips which are coming into the crypto market, which even we get in the stock market. Okay, XYZ stock is going to become 10 times from here. Even in cryptos, you are going to hear the same thing, but please do the number crunching at your end, and that itself will give you the answers which you require. One more thing I want to say, cryptos were introduced so that people can make movement of their money without borders. I am of the opinion, this is my opinion, I don't know whether everybody agrees with me or not, but still let me express it very openly. Today, you have earned something, maybe in terms of salary, business profits, whatever. You have paid your taxes. The money is lying in your bank account officially. I would like to, or let's say one of you want to send money to your children abroad, or you want to send money to a friend, you want to help him or her out, or you see a nice investment opportunity and you want to invest in that. It is my money. Any legal activity I should be able to do. Why do I require permission from the central bank to transfer my money into legal activities? If that is the thought process, if you are with me on that same frequency, then cryptos is the fear which the central banks have that this will make our own existence insignificant.
Right. Another question is, what is your reading of the global economy? Do you expect any black swans to erupt in the near future, like what happened with Sri Lanka?
Kinjalji, you'll have to repeat the question. Your voice cracked.
Oh, sorry. The question is that do you expect any black swans like Sri Lanka to erupt in the near future?
Where India is concerned, no.
On the global economy.
See, there are many countries which are having a junk status. So, yes, that can happen, but I do not think that those many countries which are in this kind of a situation can still derail the Indian economy.
Okay. Sure.
Indian economy to get derailed, our own policymakers have to do drastically various mistakes. And that also many mistakes over a period of time, which I do not think now they will be doing it.
What is your future of the, your reading of the future of the telecom sector in India? As there are only 3 major players, and will it affect the digital progress?
I do not think so, because many Western developed countries also have 2 or 3 major players only. New players in India are welcome. if they can afford the expensive infrastructure which they require to gain footing into the country. But otherwise, I think these three players, or maybe one or two extra players or additional players, may come in, because certainly I have been reading that two major players have received permission and they would be entering India through pilot projects in satellite towns and cities. I think it is open to everyone if they are all cost effective and giving better network facilities.
Okay.
Kushal, I think it has been a excellent session where you have dealt with. Pardon?
Yeah, please go ahead.
So you have, I think, covered a gamut of commodities and the currencies and everything which you have privy to, and we have been benefit. Yeah.
I have one more thing before, if we are ending the session. To all the delegates, if I'm not mistaken, this is my 5th session with the Bombay Chartered Accountants Society in, I think, the last 4 years, if I'm not mistaken. And after completing my sessions, through indirect manner, I have come to know that a lot of delegates are trying to contact me, and they try and contact the wrong Kushal Thaker because I am not available on social media and everything, which today I would like to clarify that part of it, that after the release of my book, I have been forced to come onto social media. And yes, you can come and address whatever questions you have at later stages and everything. Also, I would like to openly give a public domain email address of mine, which is my name and last name at yahoo.com. People can be in touch with me. In a couple of months' time, I shall be returning back to India, and I usually have open sessions with a lot of people who want to meet up with me also. And that also you will come to know through my emails and social media. So yes, I am available. I think there was one big question which came to name my book again. If this can be read properly, then yes, this is it. And it is available on Amazon as well as the global platforms. I think, Abhay, is that okay with you? Because there were a lot of issues. People were contacting the wrong Kushal. And there was a lot of confusion, and I used to receive indirect messages.
That's better that you clarified. And now, since you are more on social media, you will be more busy addressing the social media messages also.
No issues, but please let it be sincere and professional and not the socializing part of it. Thanks a lot.
So over to Kinjal for a very well-deserved vote of thanks.
So let me first give the glimpses of the forthcoming programs of BCAS. So the first program is the Direct Tax Home Refresher course, which is being organized with 6 other sister organizations and will be held from 19th May to 22nd of June. Then we have a seminar on TDS and TCS, a 360-degree perspective, which is being conducted with 3 other trade organizations on 20th of May. Another interesting thing is a panel discussion on important developments in transfer pricing. And at the same time, we will also be having a release of a publication, a compendium of law and practices of on transfer pricing in India. This is going to be held on 23rd of May. Then the most awaited youth program, which is the 9th YRRC, which is the residential refresher course for the youth, young professionals. That's going to be on 21st of May. The Power Summit with a recharged and renewed theme, which is thriving in a transformed hybrid world. That's going to be held on 28th of May. The 11th RRC on Indies is going to be held from 24th to 26th of June, and a program for the young budding chartered accountants, which is the CA student, where they can showcase their talent and network with young professionals, is Tarang 2022, which is going to be held on 25th of June. I request members to be in touch to be with BCS on its social media pages, which is our as BCS Global on Twitter, Facebook, and LinkedIn, and that will keep you abreast of the programs, the forthcoming programs and the activities of BCS. And now coming to the pleasurable task of proposing a well-deserved vote of thanks. Kushal, it was indeed a very nice evening to hear you from your Chicago office, and it was I am very thankful to you that you accepted this even while you were traveling and out of India. To put it in the perspective that speculation once upon a time, at least in India by the regulators, used to be considered as a sin, but that perspective is now changing, at least in the Indian environment, with a lot of young entrepreneurs who are coming in and they acknowledge that they are specunomics. It was really enriching to understand the various aspects of geopolitics and its impact on various commodities, currencies, global economy, and also on the Indian economy. You have also covered some of the most important sectors and industries during your talk, which is a good clue to understand the outlook for such sectors and industries in the near future. You have also candidly and satisfactorily responded to the queries raised by the participant. And Kushal, the most awaited book launch is surely going to help the readers to get a better perspective of the important economic parameters, which will help them to make their investment and trading strategies. We convey our best wishes for your book launch, and we hope that it would be a grand success. Uh, I, on behalf of on behalf of the Bombay Chartered Accountants Society, am thankful to you for sparing your valuable time and sharing valuable insights with the participants. Thank you, Kushal, and it was pleasure being with you today.
Thank you very much.
Thanks,
Thank you.